Hi everybody, and welcome to FANG Friday. I'm Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. As always, remember to like this video so that I know you want to see more of what we do at SAC. And if you haven't already subscribed to our YouTube channel, make sure you do so you get these videos every Friday when we publish them. And of course, it's free. I do want to remind viewers that with every new month, we do have 3 spots that are open for new clients who want to take advantage of our monthly introductory rates. When you join SAC, you will get access to over 3,000 charts in North America, and always we start off with a one-on-one session with me to explain the science behind the charts and to help you become more confident in using them. And as always, remember that our fees are fully tax deductible. So, as they say, it's practically free. But you have to be one of the first 3 to sign up. And for the last 3 months, I will have to say that those spots have been snapped up within less than a week. If you're a new viewer and want to know exactly what I'm talking about when I review these proprietary charts of ours, then go to strategicanalysis.ca and watch some of the introductory videos. Or you can go back and watch our other FANG Friday videos. We've been doing this now for more than a year, and we love to do it. Anyway, for our returning viewers, let's get right to it. Before we get to the FANG stocks, however, I'm going to start off with a critical observation, and that is the market. The S&P 500 notably acts like a single stock. I think that you may have noticed that when I forecast the bottom of the decline, which was on March 23rd, but I forecast that it would be at 2175. And, well, the actual number turned out to be 2173. Close enough, I think that you would agree. That was the growth price for the S&P 500, or 2 times book value. Now, this is far, far from the only time that we have been able to forecast a turning point in the market using SVA metrics, as we have done so over many years. However, we also saw that the stock market takes precedent over individual stocks, as we also saw at the lows. Some of the FANG stocks hit their lows with precision at the same time that did the market, but others bottomed at what would appear to be random spots. So it's important to watch the overall market as well at key turning points. Next week, we'll take a look at the markets and see what they're saying right now. However, I would have to say at the moment that we do not see a top yet, although I have to say that it may well be in sight. This week I would label as promises, a week of maybes, but no rewards yet. The market offered us a glimpse of good things, but then snatched them away. So let's take a look at the market and see what happened. Well, there's nothing much I can say about Amazon. The stock is between breakpoints. Our buy recommendation at the HB3, which, by the way, is 12 times book value, remains completely and nicely intact. And it's heading up to its HB4, which I would suspect would probably be the top. But nothing much this week to add. On the other hand, Facebook, which broke out recently, has been pulling back towards its mid-super growth price. That's 5.5 times book value. It would be nice if it sort of touched down there precisely and give anybody a chance who did not buy this stock on the breakout another chance at what I would call a perfect purchase point. Apple. Well, I mean, here's the stock. It came right up to its HB3, and remember, I had been sort of nervous about Apple at the HB3. That is 16 times its price to book value, by the way. I've been kind of nervous that I thought that might prove to be the top for the stock. But last week, or pardon me, early this week, the stock actually broke out a little bit, only to pull back in the setback on Friday. So I am now watching this stock to see whether it actually is able to break out as well. Alphabet did exactly the same thing. Again, it had been coming up hard against its low super growth price, that is 4.5 times book value. And it had been really, really struggling to try to get through. Early in the week, it broke out, but in the setback on Friday, it pulled right back down and actually a little bit below. So it kind of snatched away that opportunity. We got to be watching this stock very closely because it looks promising, but nothing yet. NVIDIA, same thing. Again, up against the break point, tried to break out, but failed. Now, I do have to remind people, or tell those people who are just tuning in for the first time, that when a stock comes up to one of their key breakpoints, we have what we call a 3% 5-day rule. That is to say, the stock must break out by some 3%, and it has to hold there for 5 days in order to absolutely confirm the breakout. So when we get a kind of a little breakout but then a pullback, essentially promising, but the opportunity has been kind of snatched away from us. Microsoft just continues very much like Amazon to keep moving right up to its HB2. And that would be 10 times its book, about 12 times its book value, and that would be a very, very long-term high for the stock. And given that the fair market value, which you can see here over on the right, is about 45% below the current stock price, I'm not sure whether Amazon will be able to get any further than that. Netflix, the last of the FANG stocks, well, it just will not break out over its HB4, which is 20 times book value. Now, that actually is not quite as bad as it sounds, because if you look at the slope of the lines, which, by the way, are multiples of book value, so they tell you how fast the stock is growing. And in the past year, Netflix has been growing at about a 40% rate. So although it would be nice to see it break out, just kind of being here and staying within these boundary conditions, you're getting some decent growth with that company. The last stock that I want to look at, which is not a FANG at all, but which I have been kind of using as a canary in the coal mine for Netflix, and which has not turned out to be the case, is Walt Disney. And we had seen this stock break down under its mid-growth at 2.5 times book value, then fail again at its growth price, that's 2 times book value, and it finally bottomed at 1.5 times book value when the stock market bottomed there on March the 23rd, and has rebounded to its growth price and then broken out again. It's now pulling back, maybe giving us another chance to buy. But what I did want you to notice in each of those charts was what happened at the market lows and what's happening right now. So anyway, a week of lots of promises, but no delivery. Anyway, that's it for FANG Friday this week. I hope you've enjoyed it, and I hope you'll tune in next week to see actually what happens if these companies are actually able to break out and give us a nice buy signal. If what you've seen has interested you and you want to take the next step in your investing journey, as many have now with us over the last few months, then send us an email at info@strategicanalysis.ca. Clients get all kinds of benefits, not just access to more than 3,000 charts, but also daily commentaries, trade ideas, and weekly webinars where we go into the nitty-gritty details of how to use the charts to become a better investor. When you sign up, I will personally take you through our system on a one-on-one video conference and show you how you can use it to become more confident and a more profitable investor. If that sounds like something that you'd like to do that's in line with your goals, then let's take the next step together. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. Have a good week. I'll see you next Friday.